Dividend growth ETFs offer investors an excellent opportunity to generate income while potentially also benefiting from capital appreciation. With dividend growth ETFs, these investment vehicles offer a perfect balance of both cash flow on a consistent basis to help with things like covering bills, or of course, giving you more money to reinvest into more stocks or ETFs. And on the other side, they offer growth potential or capital appreciation, which means that the overall investment value should rise consistently over time. Now in this video, we're going to go through 5 different dividend growth ETFs, which all consistently increase their dividend payments over time, making them attractive options for investors who are seeking and growing income streams. And on top of that, all 5 of these dividend growth ETFs have also provided massive capital appreciation, at least historically. Now stay tuned into this video because we're going to go over what are, in my opinion, the 5 best dividend growth ETFs that us dividend growth investors can get our hands on in the current year of 2023. Now we're going to go over all this and more, but after you please drop a like on this video and subscribe for more content like this. Now the first dividend growth ETF that we're going to go through is going to be the Schwab US Dividend Equity ETF, better known as SCHD. Now SCHD has been around since 2011, and this ETF tracks the Dow Jones US Dividend 100 Index and invests in companies that consistently pay and exhibit sustainable dividend growth. SCHD focuses on quality companies with strong financials and competitive advantages. And with SCHD's low expense ratio and attractive starting dividend yield, SCHD is a very compelling choice for dividend growth investors seeking reliable income on a quarterly basis and also the potential for some massive capital appreciation. Now SCHD is currently up around 175+% as far as on the all-time chart, which shows that even though this ETF offers a very decent, in my opinion, dividend yield, there has been substantial capital appreciation over the last 10 years or so. Now SCHD is also heavily diversified, which a lot of us long-term investors love. And this ETF's top 10 holdings are companies like Broadcom, Pepsi, the Home Depot, Merck, Cisco, Coca-Cola, Texas Instruments, Chevron, Pfizer, and Verizon. Like I said a second ago, SCHD has a very cheap expense ratio of just 0.06%, which is definitely an expense ratio cheap enough, even for a very frugal investor like myself. Now we get to the good part, SCHD's dividend and dividend growth history. This is what most of the SCHD dividend investors absolutely love. So the ETF currently has a trailing 12-month dividend yield of 3.68%, which definitely offers investors a decent amount of cash flow pretty much right out the gate. An annual payout trailing 12-month of $2.64 per share. And as far as SCHD's quarterly payouts, since the fund's inception, they have not missed a payout, and they've mostly, for the most part, only went up into the right direction, which long-term dividend growth investors definitely love to see. Now looking a little bit further into the Schwab US Dividend Equity ETF's dividends and the dividend growth rate, which is basically how fast they've grown their dividends over time and how fast they possibly could grow their dividends in the future. SCHD has a 3-year dividend growth rate of 14.05%, which is very, very impressive. A 5-year dividend growth rate of 12.24%, and a 10-year dividend growth rate of 11.35%. So pretty much at any time frame, SCHD has grown their dividend quite fast, at least historically speaking. Now what's pretty cool is with this program, we could see the future dividends for SCHD long into the future. Now of course, these are just estimations, but with the current 10.03% dividend growth rate, which is somewhere of around what SCHD has done in the past, we could see, again, potentially, just an estimation, $7.33 per share as far as a dividend paid on a yearly basis from SCHD, if and only the dividend growth was to continue on like it had been. Number 2, the next extremely high quality dividend growth ETF that we're going to go through is going to be VOO or VOO, the Vanguard S&P 500 ETF. Now this fund was obviously launched by the Vanguard Group, and the fund invests in public equity markets of the United States. This fund invests in companies operating in a diversified sector and invests in both growth and value stocks. Now VOO has seen some extremely impressive capital appreciation over the past 10 years or so, and up 282% plus on the max chart. VOO's expense ratio is even cheaper than SCHD's at just 0.03%. VOO also has a very diversified breakdown of holdings, similar to the last ETF, with the top 10 companies being some of the best in the world. We have companies like Apple, Microsoft, Amazon, Nvidia, Alphabet, Berkshire, Alphabet, Meta, Exxon, and United Health Group. Now, since VOO tracks the S&P 500, there's many more companies in this ETF than SCHD, for example, so there is going to be a bit more diversification with this one. Now, VU does offer a dividend yield of 1.53% as far as the trailing 12 months and around $6.06 as far as the annual payouts over the past year. VU also has significant dividend growth, and over the past 10 years or so, the dividend has just about tripled, very similar to that of SCHD. Now, if we were to look at VU's dividend growth rate, it offers some decent dividend growth, although this fund definitely has more to offer on the capital appreciation front, if you ask me. The dividend growth rate on the 3-year time frame is 2.8%, the 5-year is 6.18%, and the 10-year is 8.88% as far as dividend growth. And what's crazy is that assuming an annual dividend growth rate of 8.7%, which could or could not happen, of course, in the future, VU in theory could pay $14.88 by the year 2033. Now, if we were to chart out VU next to the S&P 500 and SCHD, VU and the S&P 500 basically have the same exact return, and SCHD, once again, is just right behind them, all offering a massive total return over the 5-year time frame. The next dividend growth ETF that we're going to go through is going to be DGRO, or the iShares Core Dividend Growth ETF. Now, this ETF is actually managed by the BlackRock Fund Advisors. It also invests in U.S. companies across diversified sectors and invests in dividend-paying stocks of companies. Now, DGRO is very popular in the dividend growth community, and for good reason. This fund has returned over 100% as far as just capital appreciation over the past 6 or 7 years. This fund does have a bit of a higher expense ratio at 0.08%, making it the most expensive fund to hold as of the last 3. But keep in mind still, a 0.08% expense ratio is still relatively very cheap. DGRO has a great diversified set of holdings, with the top 10 being Microsoft, Apple, Johnson & Johnson, JP Morgan, ExxonMobil, Chevron, abbvie, Broadcom, Procter & Gamble, and Pfizer. And DGRO has around 450 holdings, so very similar to the amount of holdings that VU had, and a lot more than SCHD. Now, as far as the DGRO dividend, we have a 2.44% trailing 12-month dividend yield, so somewhere right in between of what we saw SCHD and VU have. DGRO does offer some dividend growth as well. For example, back in 2015, a quarterly dividend was paying around 17 cents per share per quarter, and as of just a few recent payouts, we're seeing dividends paid at 30 cents or above, so almost doubling in just over 5, 6, 7 years. Now, looking into DGRO's dividend growth rate and to see what it could be paying out in the future. DGRO has a dividend growth rate on a 3-year time frame of 8.71% and a 5-year time frame of 10.31%. So very solid, a little bit less than that of SCHD, but still offers a fast-growing dividend. And if we were to assume an annual dividend growth rate for DGRO, we could possibly see in the future a $3.16 per share dividend paid out from DGRO by 2033. And if we were to look at these all in the 5-year time frame, DGRO is returning around 61%, SCHD 66%, and VU 68%. So far, DGRO has returned the least, but I'm telling you, this ETF is definitely worth looking into. The next dividend growth ETF that we're going to look into is VIG, or the Vanguard Dividend Appreciation Index. This ETF is a monster. Now, VIG is up 216% plus as far as ETF price, and this is over the last 15 or so years. VIG has an expense ratio of just 0.06%, so still on the cheaper end, and is extremely diversified with over 317 different holdings, the top 10 being Microsoft, Apple, Exxon, United Health Group, Johnson & Johnson, JP Morgan, Procter & Gamble, Visa, MasterCard, and Home Depot. And I think by this point, some of you guys are noticing that some of these really high quality dividend growth ETFs do have some of the same top holdings, and there is going to be some overlap there. So it's important that if you want to be even more diversified, to find different things to invest into, because again, there is some overlap with all the different options I'm showing you today. Now, VIG offers a 1.92% trailing 12-month dividend yields, so not the lowest, but not the highest that we've seen today. And one of the greatest things about VIG is the dividend growth rate. To give you an idea, back in 2007, VIG was paying 18 cents, 19 cents per share per quarter. And just around 15 or so years later, we are seeing 87 cents paid as of recently, 72, 69. The dividend growth for VIG has been very good. The dividend growth rate for VIG is around 14.32% on the 20-year time frame, with the other time frames being right around 10% or so. Meaning that if VIG was to continue a 9% or so dividend increase consistently by 2033, investors could see $7.74 per share of VIG in the future. Now, if we were to chart out VIG, S&P, VU, SCHD, and DGRO, we see that VIG offers 65.53% return, S&P 54.52, VU 68.52, SCHD 66.10, and DGRO 61.32. And what's substantial about this is all these different ETFs we're going over today so far are all over a 60% return over the past 5 years or so. Now, the last dividend growth ETF that we are going to go over today that has a long-standing history of capital appreciation and dividends paid is going to be NOBL, or ProShares S&P 500 Dividend Aristocrat ETF. Now, this ETF is up 119% plus over the past 10 or so years, and that's just off the ETF price. Now, NOBL does have a pretty hefty expense ratio of 0.35%, which definitely is going to add up if long-term investors stack more and more shares of this ETF. But with this ETF being a Dividend Aristocrat ETF, the fund is made up of some of the best dividend-paying stocks in the world. Now, NOBL does offer a dividend yield of 1.91% as far as trailing 12 months and around $1.75 paid out over the last year. Now, NOBL also has increased their dividend pretty consistently over the past 10 or so years. For example, back around 10 years ago, they were paying around 18, 17, 20 cents. And now there's quarters where a 63-cent dividend is paid, with the average being around 40, maybe 45 cents per share per quarter. Now, this Aristocrat ETF has a dividend growth rate over the last 3 years, 8.6%, 5 years, 6.64%. So even though this ETF doesn't offer the fastest growing dividend, at least historically speaking, the fund is made up of high quality, long-standing Aristocrat stocks that allows a lot of more conservative investors to sleep well at night. And lastly, if we were to chart out NOBL next to DGRO, next to SCHD, next to VU, next to VIG, NOBL is the first ETF that just is below 60% return over the past 5 years, giving investors just over 59% return over the past 5 years. But as you can see, pretty much any of these dividend growth ETFs have all traded very, very well, at least over the 5 years or so. So there we have it. Those are 5 of my personal favorite dividend growth ETFs that you guys definitely should look into. And like we talked about earlier, the reason I love investing into dividend growth ETFs is not only because of their diversification or their growing dividend over time, but their capital appreciation on top of that. But I want to hear what you guys think down below. If you were to have to choose from one of the 5 that we went over today, which ETF would it be and why? If you enjoyed this video, make sure to please drop a like in the video and subscribe for more. Thanks as always for stopping by, guys, and I'll see you in the next one.